Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So April was a heck of a year, even though it was really only a month. A lot of things happened, all starting with Liberation Day at the beginning of the month and ending with continued volatility towards the end. That being said, according to Bloomberg, results have not been too bad for different indices throughout the world. It is a mixed bag, so everything didn't go straight up and nothing went really straight down, but it was bumpy and the month was very, very bumpy. So what's that mean for going forward? The biggest thing right now is how the US administration will continue to deal with tariffs. There appears to be some pushback on continuing to have such strong tariffs in place. That being said, really the effects have not been felt yet. According to the Wall Street Journal, many of the products that are coming from places like China have still not hit the US shelves yet. And if the Chinese companies do not decide to send the goods because of their high tariffs over to the US, you might see in the coming months a lot of empty shelves for American consumers. What does that mean? It means that for a lot of people, they haven't really felt these effects yet. And when they do feel the effects and they can't get their favorite product, what will it mean to the US administration as the population pushes back on their politicians? So we'll see what happens over the next little bit there. We still have approximately, what is it, about 80, 70 days left until the 90-day delay is felt with the tariff renegotiations of the various countries. If we believe the US administration, they appear to say that things are going as planned, but there's been no big announcements yet. And as we know, with these multi or unilateral discussions, it takes a long time for these countries to figure out what they're going to give and what they're going to take. Foreign policy, which was a big issue in the United States for the last little bit, continues to grind along, although not nearly as fast as what Donald Trump would like. And finally, our local election, which really had a non-event attached to it from a market perspective, will essentially be looking forward to seeing what Prime Minister Carney decides his plans are going to be. That usually will start with the cabinet, what type of individuals he'll have in the cabinet, how many of them will be carryover from Trudeau's cabinet, etc., and then how he'll deal with the many issues that are facing Canadians, not least of which how he'll deal with Donald Trump. So May, June continues to look like it'll be a very bumpy time for markets. As far as our positioning goes, we really haven't changed a bunch in the last little bit, which has been good. Definitely, not selling when things were really bad here at the beginning of the month has meant that a lot of things have recovered for people. One of the other things I just wanted to touch base on was the bigger risk going forward is for recession. We did see the first quarter of the year, the initial reports coming out of the U.S. have indicated that they did dip into negative growth for that first quarter. If they do it for the second quarter, then that would be officially considered a recession. We'll see if that happens or not. And I think, like I said, the data coming out over the next little bit will be very telling. If there is a recession, then we could see traditionally that companies may not earn as much money, and that could definitely have an effect on stock markets. In Canada, depending on what happens with tariffs, most economists would say that there could be a recession coming in Canada. In the US, it's a little bit more up and down as far as whether there is truly going to be a recession. So what does all this mean? Means, like I said, continued uncertainty going forward, not to make any big gambles, big bets. We do keep powder dry in case there are some one-off issues that do come up that will allow us to take advantage of opportunities. But for right now, it's just continuing to manage our managers, continuing to keep the portfolios balanced, and looking forward to calmer times, hopefully, as we approach the summer. Jim, myself, Alex, and Angela are around so that if you do need to talk to us, whether it be for some last minute tax reporting or whether it be to talk about the markets or to talk about your specific portfolio, please do let us know. And in the meantime, enjoy the hopeful nice weather in the spring that's soon to come.